Good morning. Welcome back from a long and hopefully enjoyable holiday weekend. You're so used to those sort of summer holidays, Labor Day, Memorial Day being on a Monday. Kind of felt a little weird being on a Friday. I don't know. It seemed like an extra long weekend, although it wasn't. Yankees continuing to lose. I'm not a big soccer fan, but watched a little bit of it over the weekend. Some interesting outcomes there. I guess tonight's the big night if you're rooting for the U.S., and hopefully you are. We wake up to a somewhat bond-friendly morning. Tens down to 446. As we continue in positive territory. Looks like sixes are the new outlier. Sixes are the new 6.5s, indicating somewhere around 102.5. More on that in a minute. 9:45 we have S&P for June, and 10 o'clock we have ISM services, and that's going to be really the big one that I'm going to have my eyes on. Some Fed speak this week. Tomorrow, really the headline is the weekly ADP, if that's even a headline. To me, the real highlight of the week is 10 o'clock this morning, ISM, but arguably 1A. Again, if for nothing else, and I'm not a huge Fed minutes guy, but, the last Fed minutes and first Fed minutes of this sort of handoff combined with the interesting state of things, I just sort of think that make this a prime time event at 2 o'clock on Wednesday, and in some ways might really overshadow 10 o'clock today. Next week, and of course on Thursday you have claims, some other data. Next week, Tuesday's the day. By the way, really interesting day, right? Because we have CPI at 8:30 and Warsh testifies at 10. Wednesday PPI, Thursday, and I always talk about this, retail sales, that's a big, big number. In a lot of ways, next week is actually, for me, arguably the most important week of the month in terms of getting a real sense of where the economy is, not some of this other stuff that I think we pretend is more important than it really is, but or at least some pretend is more important. Overnight, I think maybe the most noteworthy data point was in the Eurozone. Monthly producer prices came in at 0.2, and last month's 0.7 was revised down to 0.6. So we continue to see, and by the way, the headline year over year was a huge beat. 4.9 came in at 5.9. So what we continue to see in terms of inflation is the yearly coming in line or beat, but the more important monthly miss, and in many of these cases is missing big. And like no shock. And this is where I keep, talking about how the Fed's been resolute in pointing out that they believe that this inflation is transitory, that it's oil, Iran and oil based. And when you see some of these recent significant monthly drops in inflation, it would definitely be an indication that they're onto something. Retail sales a little bit hot in Europe, so that would be, significantly bond unfriendly. Last month was a negative. This month was a slight positive. In terms of the markets, mostly mixed overnight. onshore, we're also indicating mixed, but certainly to an up bias. NASDAQ up over a point. Bitcoin down. Dollar stronger versus most currencies, and commodities pretty much up across the board. Crude down a bit. Brent slightly up a little bit. We ended the week pretty darn close to Brent getting a 60 handle. I don't think it ever actually got there. Let me just see. No, I think the low was like 70 spot 1.4, something like that. So we never touched 60. And then now we're sitting at about 71, 71. But those oil prices will continue to be accommodative for interest rates. So let's look at a couple charts here just to talk about strategy for the week. Full disclosure, we lifted a ton of 6.5 coverage on Thursday, I guess it was. And, it just seemed to make a heck of a lot of sense. I forget what strike we got out of it on, but we had a bunch of coverage on at a 104 and plus. My best level might have even been like 104.5 and got out of it at like 103.18. And it just didn't make a heck of a lot of sense to keep that on. We did put some 6 coverage on, being that those strikes are pretty darn healthy. And we're basically flat 5s and 5.5s for the most part. Those on a 3-month chart, those 2 coupons continue to be pretty much mid-board on the Fannie side as well as the Ginnie side. So what do you do from here? I mean, it's sort of a fresh month. We're wiping the so-called cobwebs out of our eyes, back from the holiday. I feel like, looking at, if anything, my call for a bit more of a float bias. And by the way, I know that, one would think that this would be a long one coming back from the holiday, but there's really not a heck of a lot to say. As I mentioned on Thursday, these are one of these things where you kind of play for an event and then you just ride the wave, so to speak. Never been a surfer, but like you're waiting for a set to come in and then, you do your thing and then you wait again. And that to me is where we are. We called a bottom last week or whenever it was. And we were right. And now we're kind of riding this wave. So if you have any questions or anything you want to say, post them while I wind down a bit. But what I would say here is it's really more of the same. I think that if you're locking, if you're floating a 6.25 to 6 5/8, 6 3/4 note rate, I'm locking that. That's full on lock at these levels. I think 6 3/4, 6 7/8 and above. It'd be hard to want to lock that right now. I don't think that there's tremendous value in that coupon. And I think, 5, 6 1/8 and below is sort of a coin flip. What was your entry point? Do you have a good story to tell or don't you? Do you have profit? When is the loan closing? I think that we are, call it 10 ticks. I would say that we're about 6 to 7 ticks. So call it 20 basis points away from what I would consider good value. What I would certainly suggest is resistance. By the way, par 22 to 24 is a solid, confirmed point of resistance, a lever, if you will, on 5.5. So, you're somewhere around 20 basis points away from resistance on a 5 3/4 note rate. So, I think that what you do is you potentially wait until 10 o'clock, see where this ISM prints. Now, this is an advantage that those of you who are originators have over, say, those of us who are in cap markets. You're going to get a little bit of a free look at 10 o'clock. I keep my eyes on that ISM, and if it's bond friendly, I think an argument can be made for living to fight another day. Maybe you float through the day and see where, you wake up tomorrow morning. Now, keep in mind, what do we have tomorrow again? Yeah, you have ADP weekly at 8:15, which is not a huge mover. So there's not a ton of risk tomorrow in terms of the data. So I think if this goes your way at 10 o'clock, maybe you're emboldened a little bit and you take that risk into one more day, right? I think that the closer your funding is to right now, the less likely you want to lock it. I mean, again, we talk about probabilities. We talk about, bulls and bears, maybe not literally here, but you are risking. Bottom was 99.20. So you're risking what? 85 basis points. And maybe it's more like 40, 45 basis points is sort of a more reasonable bottom that we're looking at, somewhere around par 2-ish, to get to, another 20. So you're risking 40, 50 basis points to pick up 20 on a short term, next week, next few days. I don't think that makes sense. I'm like 70%, 75% lock. I'm 100% lock if 10 o'clock doesn't go your way. And I'm 50-50 if 10 o'clock does go your way. Now, on the longer term, end of July, certainly August, you could probably ratchet that down maybe 20%. Maybe I'm 50-50 lock. I'm 70-30 float if 10 o'clock, kind of goes your way, but not in perpetuity, right? Until Wednesday, when we get the numbers. What do we have Wednesday again? Yeah, we 2 o'clock Wednesday Fed minutes. And so that's really what I see here is you've got 10 o'clock today, and then all things being equal, you could potentially take that risk into 2 o'clock on Wednesday. For the most part, this week, once you get through 10 o'clock this morning, is pretty benign, other than, geopolitical, right? What's going to happen? And, I read an article this morning that also bodes well for interest rates, feeling a lot better about the next 90 days, I have to say, is now, and I guess OPEC released a bunch of oil, and now with the Strait open, what people are saying is there might be a glut of oil, in the supply. It's just it as a frustrated Yankee fan as well, it just speaks to sometimes how poorly business can be run, right? Is this shiny object, so to speak, and how we just overreact to certain things and then at times underreact. And, at the end of the day, to go 2 weeks ago, 3 weeks ago, from worrying about not having enough oil to, tomorrow worrying about having too much oil, when all you're really doing is drilling for said oil, right? I mean, it's like we're not splitting an atom. I don't know. As somebody that has come to sort of value how precious time is, it's just all seems like a monumental waste of time, right? It's, and I talked about that 48-hour cooling off period, right? You wonder net how much better off we'd all be if everybody just took a beat and actually thought about the implications of what it is that they're contemplating, right? It sort of reminds me of when we're going to have a storm and everybody goes out and raids, and raids. How irrational is that we kind of raid the grocery store, and it's like, when do you ever have more than a week's worth of food in your house, right? And now all of a sudden you need 10 weeks. Is 2 weeks enough? Is we gonna? I mean, do you think we're gonna get snowed in forever? Like, it's just the whole thing is preposterous in this oil thing. And I said it back in February. Is like, to me, and this is why I'm always very diligent about saying this when you're considering your float lock considerations, is that you have loan level decisions, and those are very important. Those are transactional. Those are day-to-day, minute-to-minute. But in terms of running your business, in terms of the conversations that perhaps you're going to have with your referral sources, with your past customers, with your pipeline of leads, I think that ultimately being transformational is the way that you win big. And the way you become transformational is having the conversations that I'm hoping that we're having here. Right, is a broader market view, a bit more of a sensible market view. Is like, hey, you're not buying this house tomorrow, or you're not refinancing tomorrow. Rates aren't there yet, so who cares what happens for the next 2 weeks? We care about what happens in November, right? For example, if that's when this particular prospect is intending on transacting business. So there you have it. Thanks for joining live and watching on replay. Let's sort of knock the holiday out of us and crush July. Bulls and Bears make money, pigs get slaughtered. I'll see you guys tomorrow.